Hey everyone, welcome back to CryptoCache. Thank you so much for joining me here. Hope you're having an amazing day. Happy Sunday to you and your family. We're looking, of course, here at Bitcoin once more to kind of help understand kind of where we're at, the big picture. Best practice, the whole 9 yards, okay? So we're going to look at that and much more, of course. So if you're new to the channel, not a financial advisor, just love teaching people to trade. Really hope you can learn something here today. My goal is to help you become a better, more effective trader. So if you want something like that for yourself, I have a trading academy that helps teach you to become a better trader, a little more well-rounded. A lot of folks are coming over for that specifically because the market is kind of down in the general sense, and basically just trying to learn as much as they can while the market is down. It's the best time, honestly, to learn. So check that out in your own time. CryptoCache.tech is the website, link in the description below. Furthermore, I also send out signals for every single trade that I take. If you'd like to follow that, I got a lot of benefits there. We've taken some serious profits here recently, especially from Bitcoin and Sandbox too. So a lot of good things there as well. But generally speaking, take a look in your own time if you'd want to consider becoming a community member. It's a really awesome experience. We do have weekly roundtable discussions as well. Take a look here at Bitcoin though. Here's kind of where we're at. So on the daily, of course, kind of pick up where we left off from yesterday. We still haven't broken through 50 on the RSI. So the fact that we kind of creeped up there, but we haven't officially closed above yet, tells us that we're still working under a resistance. Okay. Another thing we can also see is we retested that level of 21,700, which is exactly why, if you didn't notice this already, as a community member, our profit target for Bitcoin, I think it was profit target 3, was 21,600, right? We picked a level just below the key level Fibonacci retracement of 21.7 and essentially got filled. So again, just some little strategies there to kind of keep you in the game, but we can see here, of course, there's a pretty strong or just consistent line here in the sand, essentially right here at about 21,700. Okay, and it retested that here recently. Not to say it's not going to continue to retest. Obviously, the more often you test something, the more likely it is to break. We had the double doji candle here. I would say as long as we don't doji candle, very, very close to this level, or possibly even close a couple of doji candles, just like we saw there previously, we should be in pretty good shape, okay? So again, all good stuff there in that regard. I like that we are retesting that level, and I have a strong feeling we're going to probably break through that here in the next retest. In fact, this could be a small cup and handle pattern forming. And we'll look at that in smaller time frames as well to kind of see where we're at. But generally speaking, looking more positive than negative, we just need to acknowledge that that is a strong resistance level still, and it could effectively hold moving forward. Tomorrow could be a very strong profit-taking day from the bears, right? I mean, there's a lot of profits to be taken over the last 5 trading days, and half of that trading amount is, weekend behavior. Okay, so again, lower volume on the weekends in general. We're not going to see a strong amount of selling off or selling pressure, but get ready for tomorrow and or later today when the eastern hemisphere of the world opens and effectively continues to start trading and adjusting the market. All right, so again, just kind of standard stuff here on the daily. We're still underneath this simple moving average 50 on the RSI. Or sorry, not on the RSI, we're under 50 on the RSI, but we are under 50 on the SMA essentially, and that's basically telling us the simple moving average, the average price right now in the last 50 days is 23,400. We're underneath that. We need to get above that in order to have that as some kind of potential support. Okay, that's again this descending trend line. Until we can break through this trend, we're effectively still considered to be bearish in the overall sentiment. Okay, so again, we're not bullish by any stretch, but we're definitely got some pretty positive signs here. And here's what I'd like to see if we look at the 4-hour. You can identify pretty quick that, first of all, we're ascending with this pattern here, concurrent with the 20-day simple moving average. That's pretty standard for the 4-hour time frame. It kind of helps you identify trends, as you can see here. Once we broke below, we stayed below for some time, broke above, we're staying above. So it's just a kind of a consistent moving average. Is really nice to me, or for me. I guess it's nice to me as well. It's worked very well. What I'm getting at is just that we are in this ascending type of trend temporarily. Okay, and I say temporarily because this could and should likely continue, but until it doesn't, and we're coming up to a resistance level, we're not quite there yet. But here's some positive, and what I'm trying to get at isn't just a simple moving averages because those are positive. We're above all 3 of them, right? What is more important here is the Fibonacci retracement levels that you can see the price action is working within. So it comes up here to the first Fibonacci retracement, about 21,200, gets rejected, comes back down. It does break below 20,700, of course, but once it breaks back up above, we see a retest of 21,700. And now, look at this, the price comes down to consolidate at the next key level Fibonacci support level, essentially right at 21,200. And keep in mind, previous resistance, new support. That's essentially what's happening here. So there's a strong likelihood in that regard that we are going to continue to honor this ascending trend and continue to progress upwards. Again, pending no massive profits are going to be taken later this evening or tomorrow. That's a big if, okay? So unfortunately right now, the best strategy in a lot of cases is no strategy. In other words, do not take a position or a trade, because it's in a lot of ways kind of riskier, because we're coming up to a resistance level. Until we break through that resistance level, we don't have confirmation, okay? And those are things I try to teach in not only my trading academy, but more importantly to my community, and patience and how important it is. In truth, I haven't sent a signal in a few days, and that's just the way that it goes. I'm not the kind of person that needs to take a trade just to take a trade. You take the trades because they work and they make sense on the data you have, and we don't have that full-on confirmation. But keep this in mind, there is some forms of confirmation in that sense, whereas we're still seeing higher lows and we are establishing higher highs. So those are very positive signs, and until that changes, we need to continue to expect the price to come up. So as long as this next decrease in value, just say the price was to drop down to 20,500, that'd be perfectly fine to come down. It'd be a parallel bounce and it'd continue upwards. It would basically be kind of a double bottom. As long as it doesn't come below 20,500, your candle wick's fine, but a closure below 20,500 would be disadvantageous. So again, heaven forbid we lose this level and the price continues lower, then we'll deal with that. But generally speaking, as long as we're still making higher lows, we're in good shape. Okay. So I would say as long as we don't go underneath, maybe just say 20,700 is a round number. That's the Fibonacci level here. That we're probably in pretty good shape to see that continue upwards. Okay. So again, not trying to concern you at all. It's just that obviously we have a resistance level that we're reaching, and we need to preferably break through that soundly on a traditional trading day, not just through the weekend. Okay. So again, because weekends can be somewhat of a flawed info based on the volume. Oftentimes it's lower. Now we can take a look at the volume. You can see there's really been just low trading volume overall in general this week. So in truth, while this is a weekend and there's not a lot of volume, there hasn't been a tremendous amount of volume in the recent past either. So that I would say that's slightly concerning in a sense. We need more volume to be able to break through key level resistances, but it is still not a huge factor for the moment based on this being a weekend. That's just kind of my thoughts. Take a look at the 4 hour. You can see we're over 50 and underneath 70 on the RSI. So when you're in that little sweet spot there, essentially we are still holding above. This is like nice, good continuation. We're making higher lows on the relative strength index, and that's important. But keep in mind, of course, that could plateau, and that's perfectly fine if it does. But if we hit 70 and keep retesting that level, we might get rejected out based on that, and that could come at 21,700. So I'm really excited to see the next 24 hours and what might happen, because it's obvious that Bitcoin is trying to continue to progress upwards. But we see here we also have this this loss of momentum, not significant, but it is potential. So in other words, if this were to intersect, we could expect the price to come back down and to retest once again 20,700, possibly even 20,500. And if we do come below that level, one-day candlestick closure underneath 20,500, in my opinion, would be disadvantageous in that sense, because we'd kind of be making a lower low versus a higher low. Okay. Again, just something to kind of think about abstractly. It's definitely not the reason to take a position or a trade. I personally would recommend just waiting a little bit longer. Obviously, if you want to get in position size effectively, that's kind of the goal. This time, this climate that we're in, low position sizing is effective. When I send out signals for my trading community, it's really important that everyone understands, and I try to reiterate this, low position sizing is the best way to go at this point. And then, of course, having a moving target trailing stop loss that adjusts when you take profit, and it adjusts upwards with you. So again, just using these little advantages through trading bots to effectively benefit you. And we use Cornix in our trading community, so you can one-click follow. It's really a cool automated experience, and it makes things so much easier than sitting there and just trying to wait for the right time and then to quickly log in and sell. That's not fun. That's stressful. We don't like stress. Make this a low stress environment, right? That's the whole point of being a good trader, is to not be stressed. And that kind of factors in too, honestly. If you live a stressful lifestyle, I don't think trading is a good fit for you. Okay, if you're stressed to the max, just in general, like you're a stressful person, don't even worry about it, because honestly, it's going to be difficult. It's going to make you more stressed out. To me, there's a lot of healthy ways you can avoid that. I think exercise and proper diet is a big factor, and I would recommend, of course, getting on the right track there too, because sound body, sound mind, and sound mind, sound trading. Okay, it's just kind of it all works together. So looking at the cloud though, here's one thing to recognize. We are above the cloud. We can see the price action kind of effectively bounced, and we'll see that continue likely again until it doesn't. I know that's funny, redundant statement. Trends continue until they don't, but right now we're making higher lows, higher highs, and there's no reason for it to discontinue. Now, granted, we did get rejected out here tentatively from that resistance level that we've hit multiple times in the past. So there's a good chance that we'll retest that and it could come back up. What we could also see too here as well, and this is again no guarantees, but it does kind of look like it wants to create some type of cup and handle type of pattern. So we could be in that partway through that where the price might consolidate sideways at 21,200 and the retest 21,700. If we were to get a retest of 21,700, I think it's going to break. It definitely looks like it wants to get through that level. So again, just something to kind of pay attention to. But once more, the cloud looks positive in one way, but keep this in mind. It doesn't mean you want to open a long position, because lagging spend is now intersected with the price action. So this conservative indicator is telling us that, hey, if you have some profits, you want to have taken them. There's a reason why we've taken 3 out of 5 profit targets already so far as a community, because you hit the right targets and you adjust that stop loss accordingly. But once again, this tells us basically that you may want to consider trimming your position if you were to have some profits on the table. Okay. Don't necessarily have to close it, but the other thing to recognize too is that the conversion line just dropped below the baseline, basically telling us we're losing that momentum, and that's concurrent with the 4-hour moving average convergence divergence, kind of telling us the story here. In the 4-hour, we might see a slight transition, somewhat of a new lower low. Okay, it may not be significant, but we could see that. So again, handful of small little things. I mean, what I'd love to see, of course, is that cup and handle pattern that I said it could happen, is to come down here. Honestly, I'd love to see a retracement down to 20,700. That'd be a great place to add to your position, and then the price continues higher from there. That to me seems sound. That seems appropriate. Taking a look at TD sequential though, we can see we came down to 7 recently, got a reset, potentially with enough consolidation here. So it really does tell us in a lot of ways that we're not overextended to the upside, which we were previously when I had reviewed this video yesterday. So keep this in mind. Bitcoin has gone sideways for nice steady consolidation, and in turn, every time you've seen this happen before, right, where it comes up to the standard deviation line, it continues to progress sideways and inevitably increases. So we should be able to consider to see the price go sideways and then increase. That's essentially where we're at right now. So we're still working within the trends, and the trends are your friends. Okay, so for the moment, it does look like Bitcoin wants to try to continue to progress upwards. But once again, weekend data, not exactly the most reliable in the sense of directions, trend setting. So again, I appreciate your patience. If you are a current community member, I'm a patient trader for the most part. I'll send out plenty of signals, but right now we don't have a full-on confirmation just yet, but it still looks very likely that Bitcoin wants to continue to progress higher. We just need a candlestick closure above 21,700, and I think we'll be in pretty good shape to effectively establish that higher high, and that would be really important. So if you take a look here, we've been stuck in this channel, this range, for a very long time, between 19 and 22,000. Okay, we are effectively making higher lows here, and that's really important to recognize. But the key takeaway is that we're still in a range, and until that range changes, we can expect it to continue. Therefore, a rejection off 21,700 could very well be the start of the price action coming back down. We gotta come to terms with that. So with us having that on the horizon and not having a full-on confirmation, knowing we're above this key level resistance at 21,700, to me that's not something that we want to go on, right? You want to have something that is concrete and evident. We can tell strong resistance levels are right here at this point. And once again, we're underneath the 50-day set moving average as well, and this one is essentially holding the price action in place in a lot of ways. We're not there yet, but it is absolutely something to recognize. Okay, so again, really just kind of letting you know at this point, even though it is looking good, I think we should get ready for a breakout. We're not broken out yet, and that's not a reason to take a position on a potential gamble. Even though I would say, if we're to just kind of break it down to a percentage, 60% probability we still see an upside here. The likelihood of breaking through this resistance level based on previous trends and patterns tells me we're more likely to break to the upside. But again, until you get that confirmation and we actually have that one-day candlestick closure above this level, there is no true confirmation to me to want to take a position confidently. All right. Again, if you're somewhat of a risk taker, just recommend small position sizing, really tight profit targets, and a moving stop loss that adjusts when you hit your targets, either 1, 2, or 3. We use a moving target too, and it works very, very well. Once you hit your second profit target, the stop loss adjusts to break even your current entry point. Okay. So again, a lot of little strategies you can apply, but all in all, this is pretty standard weekend stuff. We have a doji candle forming currently. It's, again, premature in that regard, but still not fantastic. But I do like kind of the general sense of where we're going here. I still think we're in pretty good shape, but I would not be surprised if we see somewhat of a sell-off or a correction tonight or tomorrow, just based on the market. Be interesting to see how the traditional market opens as well, in addition to the dollar index too, because depending on how you look at it, we had a pretty red day on Friday for the dollar index, and if it's green tomorrow, then Bitcoin will likely decrease in value. It's an interesting inverse pairing, but it absolutely is something to pay attention to. I can probably make a future video kind of more so specifically talking about that and Bitcoin dominance. I get that request a lot, so stay tuned. I can go ahead and check that out. But generally speaking, for the moment, we are where we are right now for Bitcoin, right? All right, well, thank you so much for joining me. Hopefully this made sense, and hopefully I didn't ramble on too much about, off-in stuff, but essentially at this point, it's all fairly relevant. There's a lot of stuff going in. Keep in mind, as a trader, you're constantly evaluating data and trying to, make an evaluated decision or an educated decision on which direction it's heading. Right now, we're still looking pretty good, but I wouldn't be surprised if we see a red day soon, just based on the profits and resistance levels forming. We can stay close to that level and retest it again. Cup and handle might break out to the upside. So we're looking still pretty good. All right, thanks again for joining me. Have a great rest of your day. Appreciate your time, support, and all the whole 9 yards there. We'll talk to you again tomorrow. See you later. Take care. Thank you.